Insider trading risks and regulations. The case of BitCAB stablecoin offering 3% APR+. Understanding insider trading in the context of cryptocurrency and stablecoins. Introduction. Insider trading, a term that has long haunted traditional financial markets, is now making its presence felt in the burgeoning world of cryptocurrencies. With the proliferation of digital assets, stablecoins have emerged as a popular option for investors seeking both stability and returns. Among these, BitCAB, a hypothetical stablecoin promising 3% APR+, has gained attention not only for its attractive yield but also for concerns regarding possible insider trading. This article delves into the concept of insider trading, the specific risks and implications for stablecoins like BitCAB, and the regulatory landscape shaping the future of digital asset markets. Understanding insider trading. Insider trading occurs when individuals with access to non-public, material information about an asset use that knowledge to profit from or avoid losses in trading. In traditional markets, this typically involves company executives, employees, or associates exploiting privileged information for personal gain. Such practices undermine the integrity of markets, erode investor confidence, and are strictly prohibited by regulators in most jurisdictions. In the context of cryptocurrencies and stablecoins, the lines can appear blurred. Digital assets operate with a degree of transparency via blockchain technology, but key information, such as protocol upgrades, partnerships, or regulatory actions, may remain concealed until officially disclosed. This information, in the hands of a select few, can offer significant trading advantages, creating fertile ground for insider trading. BitCAB, a stablecoin with 3% APR+. BitCAB positions itself as a stablecoin, a digital asset pegged to the value of a fiat currency, such as the US dollar or euro, or a basket of assets. Its chief selling point is a competitive annual percentage rate, APR, of 3% distributed to holders through a combination of algorithmic yield strategies and treasury-backed interest payments. This attractive return sets BitCAB apart in a crowded field and naturally draws the attention of both retail and institutional investors. The promise of stable, above-average returns in a volatile market, however, also brings scrutiny. Investors, regulators, and market observers are curious, and sometimes concerned, about how BitCAB sustains these yields and whether all market participants have equal access to information regarding the project's financial health, governance changes, and future plans. Potential for insider trading in stablecoin projects. Stablecoins like BitCAB operate via smart contracts and often involve complex incentive structures, reserve management, and periodic policy updates. The following factors can create opportunities for insider trading. Protocol upgrades. Developers and insiders may possess advanced knowledge of protocol changes that could affect interest rates, pegging mechanisms, or collateralization ratios. Treasury management. Information regarding significant changes to how reserves are managed or the reallocation of assets could influence the perceived safety and profitability of BitCAB. Partnerships and integrations. Strategic alliances or platform integrations could boost demand for BitCAB. Early awareness could prompt insiders to accumulate holdings prior to public announcements. Regulatory actions. Stablecoins are under the regulatory microscope. News of forthcoming investigations, new compliance requirements, or sanctions could dramatically impact prices and user confidence. Security vulnerabilities. Discovering vulnerabilities or exploits before they are patched could allow insiders to exit positions before losses occur, or even profit by shorting the asset elsewhere. Case studies, crypto and insider trading. While BitCAB serves as a hypothetical case, the crypto industry has witnessed several high-profile insider trading incidents. Coinbase listing leaks. Employees of major exchanges have been found to trade on knowledge of soon-to-be-listed tokens, profiting from price surges triggered by increased visibility and accessibility. Project announcements. Insiders with early access to partnership news or major protocol upgrades have executed trades in anticipation of market reactions, sometimes to the detriment of the broader investor base. These cases underscore the importance of robust internal governance, transparency, and regulatory oversight to prevent unfair market advantages. Regulatory environment for insider trading in crypto. In traditional finance, agencies such as the U.S. Securities and Exchange Commission, SEC, and the European Securities and Markets Authority, ESMA, have clear mandates to investigate and prosecute insider trading. In the crypto realm, regulation is rapidly evolving, but gaps remain. Key regulatory considerations include jurisdictional challenges. Crypto assets are traded globally, making enforcement difficult when parties reside in different countries. Classification of assets. Not all stablecoins are classified as securities, complicating the application of traditional insider trading laws. Transparency and disclosure. Regulators are calling for better disclosure practices regarding protocol changes, reserve audits, and governance. KYC and AML requirements. Enhanced Know Your Customer (KYC) and anti-money laundering (AML) protocols help track suspicious trading activity. For a stablecoin like BitCAB, compliance efforts may include regular third-party audits, transparent reporting of yield generation, and clear governance structures to limit information asymmetry. How BitCAB can mitigate insider trading risks. To preserve investor trust and avoid regulatory scrutiny, BitCAB and similar projects should consider implementing the following best practices. Code transparency. Open sourcing smart contracts and publishing technical updates promptly reduces the opportunities for information hoarding. Periodic audits. Engaging reputable third-party auditors to assess reserves, yield mechanisms, and security protocols enhances transparency. Governance controls. Clearly delineated roles, multi-signature wallets, and community oversight can reduce the risk of unauthorized insider actions. Powered by bit-cab.com and BitCAB.OnLine now.